All right, welcome to the INEVITRADE SMOG strategy module. In this video, I'm going to be showing you one-on-one every single thing that you need to know to fully understand, apply, and trade our proprietary SMOG strategy. And I'm going to take you inside the mind of us designing this, everything that went into it, all of the data, all of the deep understanding, so that you can really go ahead and apply this yourself and be able to be ripping profits out of the market using these strategies. Okay, my goal here is to basically have this module be a little bit more laid back than what you're seeing on YouTube. Obviously, on the YouTube side, I'm providing value, but I'm really not showing all of the nuanced details that are really going to allow you to have crazy results, which of course is reserved for you guys in the private modules here. So I'm really going to take my time, do it a little bit differently, and I'm going to show you all of the really minuscule details that tend to add up over time and make that difference. Okay, what I will say is that in this trading experience, the slight details are really what either makes or breaks things. So you may or may not be familiar with any of these strategies. I'm going to basically teach it as if you know near to nothing. You know, I'm going to be adding, of course, the foundational trading information that you've learned until this point in the education is going to be critical for understanding core principles, but I'm going to really aim to start for the rudiments of the strategy and then take you up into an advanced level. We'll go through some repetitions, we'll do back testing, we'll do bar replay, walk you through confluences and just the system in general. So in the course module, you obviously have your handbook section in this module, which is going to give you access to all of this information. So you can always refer back to that in the training. You don't have to go back into this video. You'll have these as PDFs as you're, learning, taking trades for reference. Okay, but I'm going to be going through all of the steps here, and I'm also going to be showing you on a chart in real time how we can look to apply these things and really understand it in real time, not just sort of theoretically. So overall, before we even get into any of the main details, the SMOG strategy is basically a strategy where we're reading trends that are moving. We're waiting for indications of potential weaknesses. And then once there is a significant, what we call displacement, okay, so a big significant move, and there is an area where there's extra orders being left behind, we're looking to wait for a retracement back into that area based off of statistical areas that we know will be reversals. If we are to get a macro reversal, we're aiming to enter into these areas on an anticipated reversal of the overall trend and continue to trade this down without restricting the upside. So basically keeping the potential upside of the trade open-ended, but keeping the risk really contained. What this is going to allow us to do over time is basically, maybe we take, -1, and then we have, plus 17 risk factors, right? This seems a little bit outrageous, but from trading this and from doing the testing and seeing it myself and seeing it inside the community, if you've been in the community or not, we have people getting 25 risk reward trades, meaning that if you risk $100, you're making $2,500 in a single trade just by letting these run. And so we're really trying to capture swings in the market using indicators, analysis, statistical probability, and just smart trading concepts to be able to get into key levels of potential reversals, allow them to play into space while keeping the risk contained. So that's sort of the overall main premise of the SMOG strategy. All right, so getting into the description of what SMOG is. Okay, the name comes from Smart Money OG, which is a combination of INEVITRADE's proprietary only gains strategy, which was a script basically just for a buy and sell indicator using something called money flow that we integrated with some smart money concepts. The ones that we found actually work. Like I said, this is a reversal strategy, so it's focusing on finding those key areas where markets will move up significantly and then trying to time areas of shift, weakness, entry, and then trading into a potential new trend, which can get us into really big positions. Okay, so we're using Fibonacci, we're using fair value gaps, price action, something called changes of character, and then a few OG on-chart proprietary indicators, as well as something called an average directional index, as we like to refer to it as an ADX. Okay, I'm going to explain how all of these indicators work and how it sort of shows up on your chart. Okay, so let's first go over just setting up the chart and understanding what all of the indicators and concepts that we're going to be using in this are. Of course, you're familiar with general technical analysis that we've covered in the course already, but like I said before, we're going to need a few things. Okay, so first thing that we're going to want to add to our chart is something called the ITOG oscillator indicator. Okay, so you can find this in the indicator section of the education. You can also find this right on Discord here, right where we have the SMOG/G2 oscillator and the ADX. So oscillator, ADX, you can get those on Discord and in the course. Okay, so once we add the OG oscillator and the ADX to our chart, we're going to have these two metrics right down below here. We're going to get more into how those work, why they work, etc. But this is the ADX and this is our OG oscillator. We're going to need a regular Fibonacci retracement, which on TradingView you can find right here as your Fib retracement. And if you're looking for the specific settings, these are the specific settings that you're going to need on your Fib. So just the 38.2, 61.8, 1 level, 0.5, 0.236 level, and 78.6 level. Just a regular Fibonacci retracement will do. We'll also be using trend lines, a rectangle tool here, which is going to allow us to draw boxes like these. I'm going to show you how I set up basically each one. I'll kind of get into more details like that, but we're going to need that. And this tool right here, which is used for basically position sizing shorts and longs. This is going to be helpful for visualizing the trade and also just making sure that these are getting set up properly. All right, so let's get a little bit more into our on-chart setup before we get into the nuances of the rules and how to actually start taking these trades. Also, what I have on my chart here, you'll see is this grayed out zone. And the reason I have this on my chart is because this is going to show me from 8 a.m. to 9:30. And the reason that's important is because this is where the New York stock market will open. And so this is oftentimes really, really amazing areas for SMOG opportunities where as soon as New York opens, you're going to see a crazy increase of volatility. It's because the traditional markets will have trading volume pour in. That's going to affect the general consensus of traditional markets. And then that's going to bleed over into the sentiment and the movement of cryptocurrencies. So regardless of the asset you're trading, you can expect as this 9:30 level is hit, you're going to see an increase in volatility. And with this system, we actually want volatility. So if you've learned TCL trading, which is another strategy we have, we're trying to avoid unpredictable volatility. volatility. In this case, we're okay with taking losses. We're expecting to take a little bit more losses, but we ideally want to get in positions where we can have volatility once we're in a position already, or into a position so that things can happen quickly, make moves, hopefully in our direction, to be able to let us extract a significant amount of money out of the market off of that move. Okay, so this is what I have on my chart. What I do is I basically go into the IT foundation indicator, which you can find in the module of the course, add it to your chart. This is originally designed for TCL trading, but you'll see this basically just allows me to color in or mark in different sessions. So there's a London session, there's an Australia, Tokyo session. I don't really focus on those things because they happen really early in the morning. I'm focusing primarily on the New York Stock Exchange Open. So I set that at 8 to 9:30 Eastern Standard. I'm in New York right now, so I'm setting it to that time. And that's going to basically show me, where pre-market will start. I typically start trading around 8 a.m. when I'm trading SMOG, and I'm sort of waiting for a nice setup to develop, hopefully enter to trade as 9:30 is hit. But there's no real requirements on when to trade. That's mostly just making sure that you're finding quality setups and entering the market. But that's what I have first on my chart. Okay, so from a technical analysis perspective, there's two concepts that we want to follow when we're reading price action, which is going to play largely into when we're entering positions. The first that we're going to focus on is something called a break of structure. Now, anytime you're seeing a trend confirmed, and in order to confirm a trend, we basically just need, so for example, if this is a downtrend, right, we need a low, a lower high, a lower low, and another lower high, and now that is confirmed as a downtrend. And the way that we can continue to see if either the current trend is continuing in that direction or if there's a potential change in trend is by identifying two things. First is a break of structure. So when we say a break of structure, this is referring to in a trend where there is already a trend established. So you'll see a low, lower high, lower low, lower high, and then price goes beyond this level and closes lower than this previous swing low. That's confirming something called a break of structure, and it's basically saying that the trend is continuing at least for that time period, right? So you'll notice I actually use the Lux Algo smart money concepts here, and I just toggle off like all the other stuff and basically just show internal structure, mark them up as my color, and that's basically showing me these two metrics. Okay, the second metric, the change of character, is effectively when you have a trend being established. So in this case, we have an uptrend, which is giving us a high, a higher low, a higher high, and a higher low, which is confirming this as an uptrend. Okay, we have a break of structure here that's not necessarily marked properly, right? The indicator is not going to be 100% perfect, but it's just basically there to assist you with the really obvious things, right? And then you'll notice off of these lows, as price breaks under this swing low and closes, you'll see this is where we have what's called a change of character. And a change of character is effectively where the trend is no longer producing a break of structure. It's creating a new low, which is indicating, like we've seen here, a big reversal in trend. So that's going to be like one of the biggest indications of us wanting to get into a trade. And this is sort of going to be in conjunction with our other indicators that we're not relying on them because they're reactive, obviously, but it's showing us the general composition of the market at that time. We're doing something called stacking confluences. So if we have multiple confluences leading us into our trade thesis, this is going to put us in positions where, of course, we can't tell if it's going to work out or not, but the goal is to put ourselves in high probability situations that we figured out over, testing thousands of data points with different parameters to figure out which ones give us the highest win rate, most likely positions to get in where it will move in our direction. And so we're basically using all of these things in conjunction to find these key areas overall, and then we're doing really technical entries to be able to position ourselves perfectly to extract the most amount of money out of the trade idea. So we are going to be looking at these break of structures and these change of characters as our primary drivers when we're doing analysis and we're finding setups. So that's the first thing. Okay, so in this situation, this would be a break of structure. This would be our change of character. All right, so now I want to get into understanding these indicators a little bit more because I think it's important to not only know that you're supposed to follow the indicators, but also why you're following it and why it makes sense. This is really like sort of the depth of stuff that I'm not at liberty to share on YouTube, and I wanted to reserve specifically for you guys because this is really going to make or break whether I take a trade, and it might not seem like it's maybe that critical. However, this is quite literally going to determine whether you should either ignore or take seriously all of our OG indicator signals, right? So you'll notice we have our oscillator down here, which is giving us these highlight strips, and you'll notice every time we get a highlight strip, this tends to be at least a temporary high point. So highlight strip here, high point before sell off, strip up here, high point before a sell off, strip right here, high point before a sell off. But you'll notice not all of these like temporary sell offs, even if we do get a highlight right here, it sells off a little bit, but it continues into an uptrend. So we have to know when to avoid, getting into short and long positions off of this momentum oscillator by using something called the ADX. Okay, so the ADX stands for the average directional index. This is a momentum oscillator that is showing us whether the market is in a state of continuation or potential reversal. So you'll notice here, we have a scale from 0 to 50, and we have a midpoint line here at 25. All right, and so what we did is we basically went through and figured out that this 25 midpoint was a good determiner of whether it was in reversal territory or continuation territory. And when I say reversal or continuation basically means that it's moving in a direction, right? So every time we're getting these sell signals into these, even though temporarily we'll get a reversal, but most likely, will it actually follow through? Is the market in a state where the probability of this reversal being the actual high before a change in overall direction is there, or is it going to continue to rip highs, in which case we're going to get stopped out, even if, our technical original entry is actually on point. That's what the ADX is going to do. So if we sort of scroll out and look at the ADX, we have a 1 minute and a 5 minute ADX. And this is programmed automatically into the indicator that you can get right here, either in the Discord, right? So you have your ADX, you can add to your chart, favorite, and trading view. So you can put it right in there, or you can get it in the course. Like I said, it's always going to be there for you, even if you're not in the Discord community. All right, so let's look at general market conditions and what tends to happen as the ADX is moving. So let's look at areas where both the thin one, which is the 1 minute, and the thicker one, which is the 5 minute, are both above this 25 line. So notice how we have price moving significantly in one direction at that exact point. During this entire point, we have both of our 1 minute and our 5 minute above this 25 state. As soon as we have the 1 minute cross back down, you'll notice this was the area where markets started to regulate and try to at least be in a position for a potential reversal. So as they're both above, markets are trending hard in one direction. And as this drops back underneath, market starts to cool down and try to reverse direction. Okay, so once again, both above here, markets are just ripping in one direction. And then as soon as we have ADX underneath that level, we get a reversal in the market. So what we figured out at this point is basically a criteria of even considering one of these highlight strips as an entry is making sure that we have at least one of these two lines underneath the 25 zone, which is going to show us that the market is overall in some regard in a position to want to flip in reverse. And if we're looking for taking trends that are moving counter to us, entering in key areas, and then playing into the potential of a new trend, that's exactly what we're looking for. We're not looking to see a highlight here, get in, get stopped out, see a highlight here, get in, stopped out. We really want to find key areas where we're anticipating a flip. So the general premise of this strategy, just to keep it more focused on the oscillator, we're going to be looking at these green highlights as general buy areas and this red strip as general sell areas. Now, of course, it's not that simple. If it were that simple, there wouldn't be institutions running algorithms, doing back testing. Like, this is not a sustainable system, just buying and selling whenever these strips turn the opposite color. That's not what we're here to do. But what it is going to show us is the general money flow of the market. And it's going to show us these key areas that we can use other smart trading confluences like volume, smart money concepts, fair value gaps, trend retests, to be able to follow these general signals and get into trades. Okay, so this is really going to be my primary setup. We do have an on-screen version of this. Okay, this is actually the older version. We have a new updated version that I'm sure by the time you're seeing this may or may not be in the course as well. This is going to be an added charge, right? We put in a ton of hours into this. This is really for people who see the value in the indicator, are trading with it, already understand the details of how all of these things work, and are effectively willing to pay to have them right on chart, making it a lot easier, as well as allowing you to more easily code alerts and have tables of data. It's really cool. I'm sure you'll see it in the community as well. Of course, we wanted to offer you guys access to have everything for what you paid for, but this is an additional charge that makes it a little bit easier to sort of just clearly look at your chart and find these potential areas. Now, whether you take them seriously or not is going to rely on the ADX. Like I said, for example, in this situation, we have a sell signal here, which is aligned with that highlight. Notice how we have one ADX above the 25, but the long-term, the 5-minute ADX is below, which validates our setup. Notice how we have a change of character after the sell signal, right? I'm kind of breezing over this. I'm going to show you all of the details to this, but this is cool. Just you can see how many of these actually exist. But effectively, notice how this is leaving what's called a fair value gap, which I'll explain here in a second, into an underside retest. This would effectively be our trade setup. And we probably would have, on this trade, been able to take realistically probably something in this area. So 14 risk factors. So just to blow your mind, if you haven't been trading this strategy, or if you don't really understand how significant this is in trading, right? This isn't even using all the confluences, by the way, in detail. If we were to risk, say, for example, what I do, I risk $500 per trade, and we're making 14.5 risk factors on that. That's $7,200 in profit off of one trade idea, risking $500. And these happen on a routine basis if we're able to be selective enough about the setups and really understand mastering the charts, which is what we're going to obviously get into. But that's what we're looking at in general to find these types of setups and why all of this analysis on the chart is important. Okay, there's one last thing that I want to go over before we hop into the more details of the trading strategy, which is something called a fair value gap. Now, you may have learned this before in trading or learned this in another module, but I want to explain it here too, just in case there's sort of a lapse of what a fair value gap is. Okay, so when we're talking about fair value gap, okay, this is an area where you have 3 consecutive candles. So let's take the situation, 1, 2, 3 candles moving in the general direction of your trade, where you have a big what's called displacement, okay, and then a continuation where the third candle's lowest point doesn't overlap the first candle's highest point. And what's in between here is referred to as a fair value gap. The reason this is important is because as you'll start trading price action and looking at the way charts move, notice how the price pushed significantly through this level, came up, once it came down and retested it and was drawn to this level, notice how it came right to the midpoint of this area and then sucked down into it and reversed off of it. Okay, this area is often an area where the market will gravitate towards, where there's oftentimes a lot of orders that are left over. So anytime price sort of retracts down to this level, it can often flip and be a key level of support or resistance. And these are going to be what we're basically targeting into. Now, I use the Lux Algo fair value gap indicator, which you can just find on TradingView in indicators. You can add that to your chart. All right, but basically this is going to automatically populate them based on a threshold. This threshold essentially shows me how big or small I want my fair value gaps to be. What I like to do is just tweak this out to the point where I see significant, important fair value gaps. I don't want to find like little ones like these, right? I want them to be big, juicy, actionable fair value gaps. And that's really just getting a feel of it, understanding the instrument that you're trading, and truly understanding what fair value gap is. While I do think it's okay to use those indicators, it's also good to basically have a rectangle tool on your trading view where you basically have a bullish fair value gap, which you can label as green, and then you have a bearish fair value gap. So the same thing is true in the opposite direction as well. We have 1, 2, 3 candles. We have this candle high and this candle low, not overlapped at any point in this area, which is once again, the fact that the market's moving that quickly through that area and not ever going back to retest it oftentimes means it's an area of resting liquidity where the market will come back into it. And as those remaining orders start to get sucked up, will oftentimes just continue in the direction, cause the initial displacement, right? right? So the big candle, the displacement, resting liquidity soaked up, and then continues moving in that direction. So that's what we're really going to be targeting as our entries. And something that's important to understand about fair value gaps as well is there's something in the middle of the fair value gap called the consequential encroachment level, which basically is the midpoint of the fair value gap. Okay, so if a candle wants to come into the fair value gap, say it comes up, pokes through it, but has a body close below this midpoint, it hasn't been invalidated, and that's considered a bearish sign. In this case, if we're shorting, we want that to be a bearish sign. If we get price to come up and close beyond the halfway point, which is the consequential encroachment level, that is going to be a sign that all of the orders were filled up and the price is still going to continue moving in that direction despite the resting liquidity that has been soaked up in that area. The probability of it then reversing and reacting off of the fair value gap is a lot smaller. So what we're doing with the SMOG strategy is we're targeting the midpoint of this fair value gap to get an entry in here. We're placing our stop loss a healthy way outside of the fair value gap producing candle, which is going to be our determined risk. And then we're setting a take profit initially at 1 to 4. That way, when price does come up, test the position, even if it wants to push up through it a little bit, we really need this to definitively push way past the fair value gap producing candle. And oftentimes you're going to get a response off of that and then a dump. And then we're basically looking for a substantial move in the market, a new break of structure underneath this key level to then basically reduce risk and then take profit in the procedural way that I'm going to be explaining to you guys in a second. But I just wanted to sort of crash course my take on fair value gaps because I think that there's a lot of over engineering online of some of this stuff. So I've been trading a long time. There's definitely a massive use and potential for this type of analysis, but that's really how I see it and how I've been able to use it successfully. So let's go over the SMOG general setup. So this is the trade criteria that's required for SMOG. We need at least one of the ADX lines to be below 25, which is indicating once again that reversal potential. So if we look at this as our scenario, we have the 5 minute under, the 1 minute over, which is a viable trade criteria. We need an OG signal, which you can see has happened right here as well as right here. We need a change of character or something called a change in state of delivery, which is effectively the same thing as a change of character, but it doesn't necessarily require a change of character of the overall trend. It's just a smaller displacement on the current trend. So you really just need a significant push under a key level with all of these other confluences, which will make it an acceptable area to enter. Now, we had to put the change in state of delivery in there because we've noticed that you can kind of tell when you've had significant displacement and it's something to pay attention to. So the next thing that you need is a confirmed fair value gap. So we have our change of character here with our sell signal. We have ADX confirmed down here with our sell signal also here. So notice how we have two fair value gaps here. We're going to get into a little bit more detail on some added confluences and some added, trade criteria that you can follow. Okay, but effectively both of these areas would be proper setups. And I'm going to explain a little bit more in a second. I'll kind of tease towards it here though. Basically what I'm looking for is by the time we get our 2 points, so we have this point and then this point, I'm taking a regular fib from this level down to this level. I at least want my entry to be beyond this 0.5 level into the 61.8 or the 71.8 level on my fib, right? What happens is if you start taking trades, like say there's fair value gaps all in here and there's like one here, say there's one here and there's one here. Oftentimes what will happen is the price will push back into your level and it'll start ripping through your fair value gaps and will really start to respond to it as it starts to dip more into what I call the discount zone of this move. So the discount zone is like that key level. We call it the SMOG zone, right? Basically it's in the 50 to 78.6 level on your fib. We're going to get more into sort of putting the reps in and understanding what that looks like, but just overall concept, that's what I'm doing when I'm trading SMOGs. Nothing's etched in stone necessarily, but I find that I do want to make sure I'm being like more selective on the trades that I'm taking because it's easy to just get stopped out if you're not careful to be selective. I'm using that to be selective. So on trade setup, you're basically calculating risk appropriate to your position size. You're entering one tick inside the midpoint of the fair value gap. What I'm doing when I'm entering positions is I'm just looking at the midpoint and going a little bit inside of it in the direction of my trade and then placing my position there. I'm placing my stop loss comfortably outside this candle so long as the candle is big enough and defined enough. I'm also making sure that I'm keeping aware of key levels on the trend where it also makes sense to place your stop loss. In this situation, we have a really, really juicy candle. Additionally, we have something called an overside underside retest. Technically, we're placing the entry point a little bit inside of the fair value gap, but I'm just going to use logic and common sense to place my stop loss. And then we're moving our stop loss to break even after we have a break of structure in the direction of the trend. Okay, so notice how we have high, low, high, low. This is technically a break of structure. Price pushes up, produces another low point here, pushes up again, comes back down, closes underneath that most recent level, which is creating a change of character. So now once this candle plays forward and fills us, we have this defined key level as our swing low. If we're entering our position here, even though the price has moved significantly in our level, what we're looking for is this low of this swing to be broken by the move in our direction and get a close underneath that level to then reduce my stop loss to break even. So I'm bringing this level down to my entry, and that's basically eliminating all the risk that's on the table. And now if we do get momentum, we get a break of structure underneath this level. So we get the confirmed close of a candle, which if we go one more candle forward, notice how this candle closes under that level. That's where we reduce the risk to zero. And then we're using trailing stop losses after each new fair value gap producing candle for the take profit. This is where things can kind of get a little bit confusing. So let's go over this take profit concept. Now, first off, to sort of scale out here, what I'm doing almost always is I'm finding key levels where there's probably going to be a lot of support. So we're doing this on like a 1 minute time frame, but I'm already looking at, is price going to come straight down here and just slice through this level with no turnarounds? Probably Probably not. This is sort of our range. If you know from CH1 trading, if we have a high here off of this level, this is probably going to be some zone of importance. Additionally, we have a high level here with a low level here. So either way, we're going to get some sort of support at this level. So I'm already watching that. What I like to do is go out to a larger time frame and see if there's other fair value gaps in larger time frames. So on a 30-minute, we kind of have this fair value gap that was already come down into and responded off of. So the next really sort of important level that I'm seeing is going to be this level. So we have our low here, broke it, retested at the high, consolidation, resistance, displacement through that level. So this level is going to be a key level that I'm already eyeballing as a potential take profit. Like I'm talking about like a big move down. And so I'm not always swinging for the fences here, but I like to have a general idea of like the really home run sort of trade that I'm going for. And I'm just going to target the top area of this to sort of like start off. There's different ways to take profits on this strategy. But what I'm doing most of the time is I'm setting immediately a 1 to 4. And then what I'm going to be doing is trailing the last candle to produce a fair value gap and just walking my stop loss down to this level. Okay, so our stop loss at this point is effectively 0. So I'm leaving this the same because I want to know where my initial risk was placed. I'll place a horizontal red line at my new stop loss level, which you can do by hitting Option H on TradingView. You can just place them automatically, which is kind of helpful. And then I'll use this as my temporary stop loss. I have this value, I can update it on my exchange, and we're good to go. So let's walk through this scenario now. So say we're short, we're already up our 4 risk factors. Now I'm going to be waiting for fair value gaps, sort of targeting on a macro level another key area, which is down here. So let's play these candles forward. So we already have a fair value gap. This candle produced a fair value gap. So now we can move our stop loss to this level. So if the price wants to come up and close underneath this level, we've already effectively locked in 1.95, nearly 2 risk factors. So worst case that can happen is we get 2 risk factors. So if we're risking 500, we're locking in around 1,000. And then the best case is this continues running, but we're allowing it to sort of breathe and really make a move. Okay. So as price continues to move, moves up a little bit, creates a new break of structure, new fair value gap. So now our stop loss is coming down to just above this candle. Now we're locking in 5.6 risk factors. Price makes a significant drop. We have 2 fair value gaps. This is where it starts to get crazy because we've had a really big candle down now and then a move up. So to be honest with you, it's nice to have really big wins, but depending on where you're at, if I'm seeing 13 risk factors and I want to take it off the table, it depends. If you can afford to let the trade run where you're already up on the day and you're like, I want to hit a home run, fine. I'm being honest. If I'm down like 2 or 3 risk factors and maybe last session wasn't good and I have a 13 banger, like that's really allowing your trades to run fully. And so there's nothing wrong with taking like a big win. All right. So at this point we have stop loss would be placed here. We had the fair value gap. We had to close below this level. So it would be above this candle. So it would be right here. Okay. We have another break of structure down into this key area. Okay. So remember our key area from the larger time frame analysis. So our take profit would now be under right here. We have a close underneath this level. So it would actually come down to, it'd still be this candle. So in my mind now, which is price action wise, like we've seen this slow down, get some sort of support here. We've had a massive parabolic run. At this point, I'm closing out my 16 risk factor trade, but let's just go off of technically what we're supposed to do with the take profit. What you really don't want to be doing is taking profit way too early at like 1 to 2, 1 to 3, because it's going to end up eating away at your profitability. But if you're making 17 risk factors, like it's okay to take those off the table. I'm just being honest with what I do. So we have stop loss still staying the same. So now we're seeing our key area be basically triggered over and over, get another push down. Take profit now goes to here on this level under that fair value gap. I mean, this is obviously a massive runner, but I just wanted to explain to you sort of how the take profit strategy works. Okay, so we've closed under that level. At this point, I'm putting the trade over this high level here. Now we're floating 21 risk factors in this trade situation. So technically, stop loss would be put at this level now, and we're out of the trade. Okay, so that would take us out of the trade here, locking in 18 risk factors. So we oftentimes get questions about trailing stop losses and how to actually take profit on this strategy. There's a few more advanced concepts that I'll go over a little bit later in this module, but basically that's how I'm doing it. I want to play into the momentum. I'm going to use common sense analysis. Like this key level was a huge level. Price clearly drew to it and started to slow down. So the fact that we got more bullish after that is great, but like in any sort of realm into momentum, into a level like that, I'm taking profit off the table, locking like 16 risk factors. That's your larger overall daily fair value gap that was immediately tapped into. Again, boom, over here, key level over here was tapped into. So there's another way, which is basically an alternative way to take profit. Depends on your strategy, depends on how you feel about when you're taking trades in general. But basically the beauty of SMOG is it allows you to follow a trend, to develop and trail it without taking full profit. However, not every entry results in a big reversal. So obviously you might get a run to 3 or 4 risk factors and then lose the entire trade and not able to lock any. So this can be frustrating, sort of desiring those home run trades that you get occasionally. So if you want to balance that out, this is also a model where you can remove half your position at 2R, move your stop loss to the break even level, which will secure 1R and mitigates loss. It still allows the trend to fully develop. It's going to take some of the momentum out of the massive runners. It is also going to lock in profit for some of the trades that maybe aren't so juicy, that don't always look like this perfect example that I've showed you. You're not always going to have these setups. So in this situation, let's say we were entering our trade again in this area, stop loss over this level, take profit originally set now at 1 to 2. So trade would come back down, go past our 1 to 2. We would close out 50% of the position. So you just sell 50% of the position. This locks in 1 risk factor because you have 2 risk factors and you're selling 50%. So that brings you to 1 risk factor. Then you'd bring your stop loss to that same break even level and you'd follow the same process. Now in this situation, we would lock in, instead of 18, we would lock in 9 risk factors additionally, but we'd already have 10. So we would be able to make 10 opposed to the 18. But what we would have already done is if this stop helped us out. Instead of losing one, we would actually make one. Depends on how it works with your trading, right? There's a few models that you can follow. What I would argue is that like test both and find what you feel more comfortable with. What I find is if you're trading all the time, like if you're fully dialed for the whole day, like I'm sitting in front of my computer all day, I'm gonna try to take SMOGs, you can let those try to run because the probability of you taking enough trades for say the whole week, like you're trading all day for the whole week, your probability of catching these bigger ones is higher. And all you really need is like one or two big ones to offset the hedge of trading this smaller sort of alternative profit taking method. But if you're sort of trading maybe 1 or 2 days, you only have a few hours to trade during the New York Open or something, it may be a smart decision to have a more conservative model with your trading. That way, you know, you're not waiting for these home runs. Because what if you have a home run trade that you miss, but then you start taking all the other ones and you're losing, then there's a home run, but you don't take that trade because you're not trading the whole time. That could be a little bit better to mitigate some of those risks. That's another way to take profit. Additionally, when we're talking about setups, there's a way that we can rank them. And this is sort of cool because this is what we found in our data findings. So this is all rooted in data where we were evaluating which criteria were the best, which were the most profitable, and we came up with this table. So you can always reference this table depending on if you want to get an A+ setup, which has statistically 62% win rate, which you can see 1 minute has ADX greater than 20, 5 minute has ADX greater than 25, and entry level is at the Fibonacci level. This is a beautiful 100% A+ setup. And then you can see here's the criteria for the other ones, which will have different winning percentage statistically. If you want to, if this works with your strategy, with your testing, this is all stuff that you should be doing in backtesting environments. The idea is if you have a quality A+ setup where you know your profitability is higher, you can risk maybe 1.4x of what your average risk is. And then if you have, you know, depending on the quality of the setup, you can risk a larger or smaller multiple based on the confluences. Now, I don't do this because it's too much for me to sort of calculate and fathom, but it's something that I may explore. I've just sort of been trading SMOG to see overall how it's working, but this is definitely something that I'm considering to take a deeper look into to apply to my own trading. But this is definitely something that's data driven that we feel like we should be sharing with you guys. I just want to go over one more confluence that sort of really made a significant difference with my trading. And this is using something called overside underside retest. So this is basically a support and resistance concept. But if I'm looking at a SMOG setup, so say we're taking this trend as our example, it's really easy to sort of get lost in the sauce of like just zooming in on candles and trying to wait for the signal and then get in the fair value gap, like really zooming in and just following the rules blindly. What I think is really, really effective and important is to zoom out and look at what you're doing in general. We have our discount zone generally in here. We have our overall trend level hit at this point. So are we in a key area where we could potentially get a flip? Yes, that answers the first question. The second question I'm always asking myself, if I'm looking at the current trend, I'm looking for a move out of this area. So let's look at the levels that we need to see break, right? I'm going to be drawing levels in here off of these highs and starting to paint some sort of picture of what I need to be broken in order to constitute this level, this level. Okay, we broke a little bit above that one. This level reclaimed. Do we displace this? Which A is indicating enough strength for me to consider this obviously a change of character and a bullish, but also is the fair value gap going to be met as I'm retesting this resistance level that couldn't be broken each and every time? Once it is broken, it's going to function as support, as we see basically across the board with technical analysis. So in a situation like this, okay, let's look at what happens. If I'm zooming out, we get a push above that level, we get our change of character. Let's adjust this line a little bit here. Generally speaking, we are getting a retest of the overside of this trend. Okay, so notice out here, we don't have a fair value gap, right? Because this wick is coming down and ruining it. But what we do have is a fair value gap from here to here. And this is really where we got like the biggest candle. And this is also right on these key other important support levels. Okay, notice how there's a key level here, 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 down here as well. So this candle, really where we got the initial push into momentum with this creating a fair value gap, is beautiful. So if I'm taking my fib, I'm looking, this is the 5061.8. Additionally, this is giving me a really nice bullish fair value gap, in which case the price is coming back down, testing the overside of this trend generally speaking, tapping into all those key levels. We have both of our ADXs underneath our required value into a key support level. And that's exactly the area that we could be targeting. Midpoint of that fair value gap underneath this candle here. Take profit to be determined. Once we get the change of character, we reduce our risk to break even, and then we allow the trade to sort of play out. So let's take a look at how we would actually input this order on an exchange, because I think this is a question that we always get. I'm not going to really do it because the price is different than obviously like our theoretical model over here, but I'm going to show you realistically what I'm doing when I'm getting into these positions, because it can happen quickly. So you really want to be on top of your thing. Anytime I see a highlight zone, the first thing that I'm doing is I'm putting my take profit box over to the side like this, and I'm positioning it as soon as I see a fair value gap. I don't know which one I'm going to be targeting yet, but I'm kind of already positioning myself generally in this vicinity. The next thing that I'm going to be doing is using an indicator called the INEVITRADE position size calculator, which you can actually access right here. IT position size calculator. That's going to be a trading view indicator that you can have access to. You can add it right to your chart. And basically what I do is I star that, I keep it right here. And then in the midpoint of this fair value gap, anytime I'm seeing a fair value gap being produced, even if I'm not targeting, I'm clicking that. I'm clicking my take profit up to, you know, say just a random level just to do it quickly. So outside of where I'll eventually adjust it. And then I'm putting my stop loss underneath, at least in a general area, but ideally like as soon as I see the first fair value gap, I'll put in the amount of money that I want to risk on that trade. All right. And now I basically have these levels that I can update, and it's going to automatically update the quantity based on the adjustments that I make. So that way, if say I'm targeting a different fair value gap, it invalidates, then I start to see a high point here where I'm starting to get a reversal. I can then be like, okay, now it's action time. I'm going to set up this order. order. This is going to be the fair value gap I'm targeting. I know I have my position size here. Take profit matches up over here. Now I can go over to my exchange and I can go and see all I have to do is look at this data box here. All right, now I can basically input my order price, which is going to be your entry price, so 212.46. Your quantity is going to be 814, and then you're checking this take profit box, inputting your take profit and your loss, and then you're going to hit buy long, and that's going to set a limit order exactly to risk the specific amount in order to target this amount. So if I do have this trade play out into my favor, it fills me there, comes up. Once again, this is going to depend on how my take profit strategy is. Okay, but as soon as I have the fair value gap, once again, stop loss is going up to the fair value gap producing candle. We've got aggressive, big, massive move. These do happen, but they're rare. So now we have that locked in. So we would have ended up locking in 5.8 risk factors on this trade. But that's how you order input, and then you're basically doing all of your analysis. But this overside retest is a huge, huge confluence that I like to add to my trading, just if I'm looking to be more selective and not worry about the volume of trades I'm taking, but just really focusing on the best setup. But what I will emphasize is whatever works for you statistically is what you should be following. There's not like a one-stop sort of solution to this. You got to really just figure it out on yourself, test it, see what's working, and then go for that. All right, so I'm going to replay the past few days of price action just to show you how I would decide to do this in real time. You just sort of look at the realities of trading this in actuality without just looking at it in hindsight, because it's obviously going to be different. I'm going to keep everything on chart here, talk about my mindset and my analysis. So this is going to be starting at 8 a.m. on February 4th. It's the 7th now, so we'll trade 3 sessions, and we'll see what we're able to get at the end of that. So going into 8 o'clock, we have a sell signal here, but price isn't really generating any sort of significant displacement. All right, so now I'm looking for bearish fair value gaps. Okay, so what I do notice is that we have this overall trend here, this level, which I would love to see being broken, which is going to confirm that we have a change of character on this overall move here. We obviously have a few fair value gaps that we can be targeting. Okay, we have our change of character here. We have our 1 minute ADX under 25, but it's starting to come up above here now. We'll see what it is during the time of entry, but I'm going to use my fib from this swing high to where we are currently. This fair value gap is in our required zone here. All right, so price is coming back up. So what I would do now is set up my position, which would be the midpoint of this. Stop loss is going to go up here. Take profit's going to go somewhere down into this zone. So we get our response. We crack back down, still not doing anything. We have our close under this level. So we're reducing our risk to 0. Price comes up and tags our stop loss for a break-even trade. Okay, so that is, so we can just mark this as 0, and then we'll go to the next trade. Okay, so now we have a buy signal here, and we have a ton of momentum out of the New York session. All right, so I'm going to zoom out and see where we are with this current price action. So it looks like we could have maybe some support on top of this high level here. So I'm going to be looking for potential maybe longs into this, but maybe not. Now we already have a sell signal. So as soon as I'm getting a sell signal, I'm not interested in taking these to the long side anymore, into the fair value gaps. So we have a change of character into the support level, which isn't super nice, but we do have it slicing underneath this level as well. I want to see what this next candle does. If that's like springboard support, I don't think I'm going to take it, just because that's that key support level. So on entry, we had both below. We had a sell signal here, but we had just other common sense analysis basically telling us not to take this trade. All right, so that's what is going to allow you to start using your discretion a little bit more. We have retesting that level, big break underneath this time, underside retest on this, which kind of looks good. We have ADX down below here. Sell signals still up here. On this most recent move, it's in the 50% zone. We've already broken back above this high level, so we're not taking that trade. Now we're testing underside resistance here. I'm just gonna let the market sort of play out. This is kind of directionless chop here. I really want like a definitive change of character here. On this trade, we didn't really have a change of character underneath that level. We had a break of structure, so it's not really what we're looking for. Okay, so these are all break of structure, fair value gaps, so we're not really looking to tap into any of those. We have a change of character, but no fair value gaps, so we're not really targeting anything into this zone. We have sort of change of character and a reclaim. This isn't any good price action that I'm going to want to get into. We have a sell signal, resistance up here. I would potentially look to take this if it wants to come back up and test this level. All right, take profit will be down here. Now we have a buy signal, so I would not be taking that because we already had a buy. So that's out of the picture, even though it would have tagged that level nicely. Okay, so here we don't really have a proper change of character. This is like little BS chop over here. So I'm not really looking to get into anything. I really want like a proper trend to set up. So I'm waiting for something real to develop. All right, so here we have buy signal, an established trend here. This is basically applicable with everything that I do. Elliott wave theory, right? And I'll start to look at wave structure in general. So buy signal here, significant move out from underneath these trend levels, which is important. All right, so there. This is the one that we used before in the example. So obviously I'm a little bit biased because this is the one we just did an example on. Break even would happen at this point. All right, up to here, fair value gap candle, boom. I remember we locked in that level. So here out for this amount, we have plus 565, plus 5.5. So now we have sort of this type of trend level here, change of character, sell signal. I would target that level easily with stop loss outside of that level. Ideally, I want it outside of that retest zone. In this case, we can't really do it. We have a nice displacement here, nice change of character. So I'm going to get into this zone. Obviously, these are the juicy ones. All right. Either way, I'll show you all of the losses that we would take too, because I don't remember. I'm not really doing this off of memorization. It's just I remember that we just used in the module here, but we'll go into stuff that we haven't covered and we'll be able to see what we would do. Right now we have a break even. Maybe we would have taken 1 loss or 2 losses in here, but we have a break even 5.65. And then this one we ended up trading down. I think it was 18 risk factors. So we'll just skip ahead because we all remember how to do this. Right, we're trailing fair value gap and it ends up getting us out. All right, so we're locking in 18 risk factors, call it. All right, so this would be considered amazing already. You already have 5 and then 18, so you're at like 23.65 risk factors already, which is amazing. Don't worry, the losses will also come in streak. I promise you that. So it may feel like you're on top of the world and you can't lose, but I promise you, you will go to a point where you can lose. So let's see what we got here. No fair value gap. We have bullish buy sell signals. No definitive actual fair value gap that we're going to pay attention to. None of these are really valid at all. So now we have a pretty big displacement candle support over here, but we already have a sell signal. So the money flow already gave us a red signal. So we're going to ignore that. Okay, we do have a sell signal here. Technically, we could take this trade, but the thing that bothers me with this though is that we've already sold off so much in the session and we're sitting right at these lows. I'm not really super interested in taking a sell here. Additionally, we don't have a proper change of characters. We're not going to take this trade. Okay, now we have a proper change of character. All right, so if it displaced under this level pretty critically, where we did, ADX is 1 under, so I would potentially take this as a trade. So we could say into resistance over this level, a little bit outside of this. So it would have came really close to stopping us out thus far. I don't know if it goes back up again, if it breaks down, because that's a loss. All right, so it's a -1. So now we're going to wait for our next signal. We want like a big displacement candle, like something actual, like something big. Okay, so we have bullish, but we're getting sell. So still though, we're trending along this level, which to me is like we need to have some sort of break under that for this to even constitute any sort of look. This is already in too big of a downtrend here. I'm not even going to look to take any of this under these short buys. Not getting us anywhere. Now, if we want to break out of this and produce a fair value gap, I'm down for it. It's a little high, right? So it's a little high over. I was hoping it would be something maybe down here. Would be nice. So to me, I mean, technically we're both under. It's a key level of support here. The thing is though, is it's high off of this retracement. It's up in this upper quadrant here, which is going to lead to more stop outs, but into momentum like this, considering that there's also this level over here, I would take it potentially. So we'll target the midpoint stop loss. If the stop loss is going under this candle, like this is so tight, I'm going to probably go underneath this little wick here, right? So we'll give it some space to breathe. So now we had a candle close above the high. So we're reducing risk down to break even and we tagged the break even. So let's wait for potentially a long setup here. Bearish fair value gaps, but positive buys. So we're not getting into any of that. Now we have displacement on this overall trend level here, which looks pretty good. The only thing is if this comes down and retests this trend, it's going to stop out the fair value gap. Let's see if this even pulls down in time with the ADX to be aligned. So we have a sell signal here already, breaks above it, comes up, doesn't really test the midpoint fully. We probably would have missed that trade even so, but it's good to see that you'll see it like reacted off of it. Break of structure, so nothing here. Near miss would have been nice. Need a change of character now to take another trade. So there's a little bit of a fair value gap right in this zone. Fine to take over this candle. There's a juicy order here, but there's support here as well, which is like resistance flipping the other side. So it's potential that we would take this. So we're taking that. So we get a reduction of risk immediately because it's not that big of a range here. So that would be our stop loss at break even, mate. So it's a 0 trade. So once again, not what I'm looking for. I want like definitive fair value gaps, like nice big moves. Not really getting much here. Mind you, I'm trading around the clock here, which is not realistic. I'm just showing you like me just going through the entire market and making decisions and seeing what will happen, just to kind of show you like realistically like we're gonna do in real life. Okay, so we have buy signal here, change of character, fair value gap down to this zone into this is a critical support level. I don't know if it'll ever get tested again, but if we were to want to come back down into this zone and the other conditions for the trade are proper at that time, I'm okay to take a trade. I'll put the stop loss underneath this level. See if we can target that. All right, so that's gone. That trade's already gone. You can forget that. You can kiss that dream goodbye, brother. Do we get a change of character? Okay, we do. So here now we have a nice fair value gap. If this were to get tested, this is a beautiful trade setup. So we'll go set this one up. See if price wants to come up and test it. Does sell signals and wicks us out for a full loss. All right, so this is an example of a change in state of delivery, right? Where we have a big displacement candle after a nice impulse candle. And we also have something called an order block, which we don't necessarily usually talk about. But basically an order block is like if we have this equal high being hit, so price actually comes, pushes aggressively, just breaks above it, has a bearish candle to break below that level. It's actually pretty close to being even. And then we get a massive second candle to displace it, leaving a fair value gap. So this looks like a significant area where we could flip over. So this is also fine. We have our 1 minute ADX in the sub 25 category. Realistically, I'd probably put my stop loss not over this level, but probably over this level, and then set my initial take profit. Okay, so price comes up. Give our change of character now. After this point, stop loss is going to go to break even. We're at 1 to 4 already, so now we're going to start trailing fair value gaps. All right, so I think that a fair value gap already got populated in here. So we'll see if this gets okay. So that got wicked through. So that's plus 393. Now we have 8 o'clock happening. This is really where realistically you're starting a trading session. All right, so we have a buy signal here and a fair value gap right in this zone. This is also low key kind of a dope buy signal here, right in this pocket. Probably put it underneath this level and get stopped out. So change of character again, change of character, bullish fair value gap, trend break. So I would target that level again, just underneath this candle. So we just missed that barely by a hair. It did kind of go down to that price. It just never really filled it. Now we have a change of character underneath this level, and this is about to hit. It's like pre 930. So I would love to get into this. This is a nice big fair value gap producing candle. This looks really bullish to the upside. So it probably gets stopped out, but in the event that it doesn't, I think targeting the midpoint here and stop loss here, this is going to get smoked through. I can tell, but maybe a good try. Oh, no. Good. So into that fair value gap, risk reduction. See, sometimes something to remember in trading is whenever it feels like the scariest or the craziest trade, like this is where people who have enough experience will not take trades because they're afraid of losing, but where people who are just beginners will actually be able to take trades no problem, which is like where the whole idea around beginner's luck comes from. All right, so we have nice move. We have 1 to 5 already hit, so we're going to be trailing fair value gaps, which would be this. And the price comes back up and tags us out for a 2.8. It would have been really exciting if that just cascade sell off. But so we traded 1 day of price action. Let's go through this. We've seen a lot of examples already. You know, you can just do this into continuum and see how your results end up turning out. In this situation, we had a 0 stop loss. We had a +5, so 5.65 plus 18, which was the nice banger that you'll get once in a while, which is good, equals 23. So -1, 22, 0 isn't included, 0 not included, -1 plus 3.93, -1, 0, and then this was a 2.8. So over trading like these few sessions, right, we got one big one. So like realistically, like this was a blessing. Like we got blessed up with like a massive risk reward. Let's say that we take that out. Let's take out the 18 just to kind of show you like realistic ranges. So like if we have a nice trading session over the past like 2 days or whatever, we can get like positive 9, 10 risk factors, right? And that's really nice, including slippage. Maybe cut out like another 3, so you're up like 6.38. So if you're risking 500 on the account over 1 or 2 trading sessions, you're up like $3,000, $3,200, and that's with losses, whatever. That's accounting for a lot more. Now if we were to account for this in totality at 23 whatever times 500, you're looking at 11,000 in profit risking 500. Or if you're using $100, then you're looking at $2,300 risking $100. So if you're able to do that over say the course of a week, and you do that over 4 weeks, you're talking about serious money by mastering these skills. Even if you do a quarter of this, you're still getting $2,300 risking $100 if you're actually able to fully master this. Definitely not easy. Definitely does take a lot of repetition and practice and stringency with following the routine, but I just wanted to go through this, show you guys all there is to basically know with SMOG to be able to deploy this. Now it's time for you guys to go hit the charts, hit the Discord, ask questions, get the reps in, and continue on your learning journey.